Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Sutlej Textiles and Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vipin Valame, Full-time Director and CFO. Thank you, and over to you, sir.
Thank you and good afternoon, everyone. I welcome you all to earnings conference call of Sutlej Textiles and Industries Limited for quarter ended on December 31st, 2021, and half year ended on and the 9 months ended on 31st December 2021. I hope all of you and your families continue to remain safe. I have with me Mr. Udip Singh Ji, President and CEO of Sutlej Textiles and Industries Limited, and Stellar Advisors, our investment relationship team. The result presentation has been uploaded on the exchanges, and I hope everyone had an opportunity to look at it. I will take you through financial performance highlights, followed by industry and business insight by Mr. Udip Singh Ji. After seeing more than a year full challenges, we have started to witness revival in economy when the third wave of COVID-19 pandemic hit us. As you are aware, the textile industry had already started witnessing sharp recovery, and we saw that the impact of third wave of COVID-19 was much less than anticipated on the sector and on Sutlej in particular. We witnessed good traction in domestic as well as export markets, both in terms of realization and volume growth during the quarter. Yarn business exports during the quarter contributed around 42% to sales compared to 32% in Q3 FY21. The capacity utilization level continued to be at around 94% in yarn business, which have reached to pre-COVID levels, and around 69% in home textile business. During the quarter ended December 2021, the company reported consolidated total income of 823 crore against 557 crore in Q3 FY21, witnessing a strong growth of 48% year-on-year basis and growth of 3% sequentially. We believe that sequential growth was somehow muted due to some impact of third wave of COVID-19, which we believe that we should get over in next quarter. For 9 months FY22, the consolidated total income stood at 2,211 crore against 1,227 crore in 9 months FY21, showing a growth of 80% year-on-year basis. The consolidated EBITDA during the quarter was 99 crore as against 52 crore in Q3 FY21, a growth of 93%. And we saw some marginal decline compared to Q2 FY22. The EBITDA margin stood at 12.05% in Q3 FY22 compared to 9.25% in Q3 FY21 and 13.38% in Q2 FY22. The consolidated EBITDA during Q3 FY22 was lowered compared to Q2 FY22 by around 7.5 crore in spite of increase in total revenue, mainly on account of some one-time changes. First, road tax benefit of 6.71 crore pertains to Jan to June 21, recognized as income from operation in Q2 FY22. There was a discount going on in road tax e-script, so company has taken the discounting provision of 2.74 crore on e-script recognized in Q3 FY22. And we saw one-time benefit of PPP loan waiver in our US subsidiary, which is around 3.83 crore recognized in Q2 FY22, which is not there in Q3 FY22. The above impact is also visible on PBT and PAT for Q3 FY22. Reported consolidated PAT for the quarter stood at 37 crore as against loss of 12 crore in Q3 FY21 and 42 crore in Q2 FY22. During 9 months FY22, PAT stood at 99 crore against loss of 31 crore in 9 months FY21. I would also like to highlight that on the balance sheet side, we have consistently been trying to contain the overall debt and maintain the overall gearing below 1. There has been marginal increase in total debt of around 35 crore to 942 crore during 9 months ended December 21. This is mainly on account of debottlenecking and maintenance capex up to 9 months, and increase in working capital, which is mainly due to increase in number of days cotton inventory and also significant increase in cotton prices during this period. We are closely monitoring the inventory levels, and we are confident that we will be able to bring it to the normalcy by end of this fiscal. Lastly, we would like to highlight that presently around 30% plus of working capital limits remain unutilized, thereby providing the company adequate liquidity. That is all from my side. Now I would request Shubdeep Singh ji to share business outlook and industry scenario, and then we can open the floor for question answer. Thank you, and over to Shubdeep ji.
Thank you very much, Bipin ji, and good afternoon to you, ladies and gentlemen. I thank you very much for taking time off to attend this investor conference call for our company. I would like to introduce a couple of my colleagues who are with me. One is Mr. Oscar Rick Plaza, who's the business head for our home textile division, and Mr. Jitendra Kumar, who's a vice president for raw materials, that means fiber, all type of fibers, man-made as well as cotton. So I got them in because these are two important areas for any textile group like ours to be there, so they are here. And since Oscar is here in India, so I thought him to join as well. The COVID pandemic has altered the global textile and apparel supply chain, with several apparel brands preferring more than one sourcing destination. Further, the US cotton trade war and the subsequent imposition of additional duties on Chinese textile and apparel imports have led to importers in US scouting for other destinations such as India. It is observed that made-up sale in India has been a huge beneficiary of this trend and has witnessed robust offtakes over the past 18 months. Bangladesh, Vietnam have been benefited in ready-made garments space on account of importers looking for alternative sources beyond China. Additional optimism is emerging with Government of India becoming benevolent towards textile sector. Several incentives such as ROSTSCL, Mitra and PLI for man-made fiber segment have been announced over the past 8 to 12 months, and the stance of government on free trade agreements is also welcome policy change for T&A players. We see government being more open to FTAs, with Textile Ministry confirming that several of them are under negotiation and could be signed in the financial year 22. Even as the risk of subsequent pandemic waves remains, it is expected that domestic spinners and textile industry will sustain healthy volumes in the financial year 23 as well, amid a shift in preference away from Xinjiang cotton. Improved capacity utilization, greater financial flexibility have led to pick up even in capex activity in spinning segment, particularly in recent months. This follows muted capex activity in recent years. Several spinners, particularly in mid-scale and large scale, have already announced some of their capex plans for this. In addition to this, capacity enhancements plans include capex towards debottlenecking, modernization, as well as margin assertive or efficiency improvement projects such as machinery upgradation and renewable power capacity additions. The current scenario in the market, as you are aware, that spinning is doing good. So even in home textile, domestic market segment is improving. Since there were no travel restrictions, the major wholesalers are looking to make new product introductions this year after 2 years of almost nil. During the festive season, domestic market experienced a spike in orders at the retail, which reinforces Indian consumers' quick to bounce back mindset. The third wave of COVID was feared to affect deeply the third and fourth quarter. However, we see some positivity, with COVID restrictions being revoked completely by UK, and Germany and other European countries expected to follow the trend. We continue to see growth in UK. And the third wave of COVID may have some impact on local or export sales, essentially in retail. Trade shows such as HGH in India, Heim Textile Germany have been deferred to later part of the year. These trade shows are integral part of this trade, home textile trade, as you are aware of, and we hope to see this happen to give boost to new sales. Europe declaration of non-seriousness of this type of COVID will assist to boost market segment. Markets in Southeast Asia are projected to open up in coming months. North America continues to be wide open for business and the new and the reorders are on a steady rise. Home textile trends indicate a preference for sustainability. Now coming to outlook for the raw material, the fresh polyester prices have remained volatile and higher on back of the robust demand, steep increase in prices of cotton as the natural fiber and crude oil, which recently touched a decade high and expected to touch, I would say, about 100 a barrel, higher international prices, ocean freights and volatile currencies. The prices are likely to remain firm in future. The prices of recycled polyester fiber will keep following the price trend of fresh fiber. With increased volatility and higher prices of PET bottles, the fiber prices are expected to remain stable to higher. Indian cotton prices for the current season 21-22 have registered significant gains as a result of lower area sown under cotton by about almost 7.2%. It was 12.07 million hectares. Crop damage due to erratic weather, extended monsoons, unseasonal rains, and insect attack, with current trade estimates pegging the crop at about 340 to 348 lakh bales as projected by CAI. Tighter cotton balance sheet. So I think this robust demand as well of the large raw cotton from India and mills during the 21-22 have left opening stock of cotton during the season 21-22 significantly lower. So what we see that cotton prices, we feel that will remain little firm, although these may not grow, beyond this point. We'll come to that later. So we strongly believe that strong yarn business and upstream home textile business will lead Sutlej to deliver robust performance and continue to add value to stakeholders. Thank you very much. Now I open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ritesh Poladia from Girik Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, this quarter we have seen a good jump in the realization YOY basis. Sir, what is the value-added mix in this quarter sales?
When we say value-added, I would say that in our yarn business we have almost 25 to 30% of the value addition. Both for in export as well as domestic. Are you able to hear us, Ritesh?
Yes. Can you hear us, sir?
Yeah, we can hear you. We can hear Ritesh. Thank you very much.
Yes. So at the COVID times, there was a period where grey yarn was going more than the colored and value-added yarns. So is the mix now optimal, or still there is a room for improvement to go for the value-added yarn?
I think there is still room for improvement because you see, it is the value. When I say value-added yarn, this could also be dyed and grey, both put together. It is a blend of various fibers also which add value. So I still feel that there is the scope for value-added yarns in dyed segment as well going forward.
Sure, sir. Secondly, if we see now our volume is coming in the range of 25 to 28,000 tons, and your utilization is also 94%. I guess last you have put up the capacity in terms of spindles was in 2017. Is there any now plans to increase the capacity, or would you like to remain at the same levels?
See, point is that yes, we may think of, but then at the moment we don't have any plan to increase immediately, because if you look at even the deliveries of spinning machines are ranging between say 2 years to 3 years. So which we expect that would come down in about 6 months time, because once this settles down, so their deliveries they'll be start quoting in the range of 2 years by next 6 to 8 months. I think at that point of time we would think of that if we can look at the capacity increase. However, we need to improve our own efficiencies. We would like to get better there. So we'll improve our margins till such time.
Yeah, just to add here is this, what has happened is that one, you are considering a capacity and the tonnage, what you are seeing as a number. But what majorly happening is that the product mix changes, what we have done internally. As you asked the first question, shifting on more of a value-added, spindle shifting on more value-added, going coarser, going finer. So that is also add a significant value to the customer. And what my point is that keeping the production level same, still one can have a room to go for a better EBITDA margin and also better growth in terms of sales.
Sure, sir. Coming back to again value added. Sir, if any quantitative information is given, it would be much better to analyze. Even on the index level, say last year it was 100, this year it's 100 plus, and when we can go, say, in a year down the line.
So currently, if you really see, we are having almost 35 to 40% of our spindleage on melange. I would say the entire melange, which is on a value added, in almost significant portion of it. Now, part of it, even on a synthetic side, also is also on a value added. Since what happens in our case, as you know, that we are actually made to sell company. We generally do not create the inventories. So what happens, we do a lot of sampling. So giving you a fixed number becomes very hard for us, because we are having a lot of SKUs and a lot of dyeing capacity with variety. So when we typically say that in black, we may have 100 varieties of black. So what I'm trying to say is that we are having a significant value-added position, but giving a specific number in terms of spindleage or something is very difficult.
Yeah, you are absolutely. It's not only in terms of spindleage, in terms of what we have made new products in this time. In this quarter or in this year, over the last what you asked during COVID, I think we have got our sales more by almost by 20% in terms of value added. That is all. We can share at this point of time.
And just to add here that if you see the even export side, that what we are seeing is that as we say that value added means that the export also has increased significantly in terms of the value and in terms of the volume also, and with new territories also. So customer world over, as the markets are opening, we saw a good amount of traction in export, which also is I would say largely a value added business.
Sure. And in terms of home textile, definitely there are a lot of developments. When do we see the break even actually?
I think we expect that FY23 should go very well for us. And we not only see break even, but we see good traction in the year 23.
Sir, if I heard right, this quarter utilization was 69 in home textile?
Yeah.
Yes.
How much would be job work and your own sales? Yeah. So I am giving you a number of 69, which is our, so job work is very, very small in that, maybe,
okay.
Because we did not do much of a weaving job work. Our processing unit is having job work, but that way I'm not considering because processing is having a different capacity calculation. So I'm giving you purely 69%. You can consider almost 90% plus is our own out of that 69%.
Okay. So say in couple of years, can we assume your realization can be 2x in the home textile?
Yes. That is what we plan to.
Great. Yeah. That's it from my side. Thank you very much, sir.
Thank you, Ritesh.
Thank you. The next question is from the line of Monica Arora from Share Giants Wealth Advisors. Please go ahead.
Thank you for giving me this opportunity. And congratulations on good set of numbers. So I wanted to ask that when do you think that the home textile business will be a bit positive?
Thank you, Monica ji, and good question. Yes, we expect that FY23 would be a year of home textile for us, where we'll be coming to positive in the year.
I also wanted to ask that why do you think that the EBIT loss has widened in home textiles?
Okay, Monica, there are a couple of points which I would like to highlight here. The loss has widened is, if you see my opening remark, as I mentioned, that this home textile business is both a domestic, that is Indian business, and American silk mill. So first of all, if you remember, I mentioned that 3.93 crore one-time PPP loan waiver has resulted into other income. So you are seeing a number which is 676 loss to 11.86, so 676 to be adjusted with 393. Point number one. Point number two, in American silk milk, we were having the order book of almost like maybe 1.2 million to 1.4 million. But there were major constraints in United States in terms of US logistic issue. And Oscar is with me here. So US logistic issue has actually hampered the delivery. So the way we were expecting this quarter to improve, that is the December quarter, that could not happen because, as you know, most of these containers are floating on the US Sea, and even the drivers is a shortage. So what is happening is that the material which they are getting from India, China or Italy, that is getting delayed, so that has impacted on the sales. That is point number one. On home textile front, as you know that we launched Nestera as a new brand. Last quarter, that is, we were expecting more books and things to get launched. Probably, I would say probably there is a delay of maybe 1 or 2 months. So now the books are with the stores, and we are now very positive that in this quarter we should see a traction from February, March, and it should continue to the next financial year. But to answer your question, yes, this is not exactly apple to apple. So slightly it has increased because the fixed costs remain fixed, but sales did not take off the way it was expected in this quarter. So there is a lag.
Okay. And any marketing strategies planned for the home textile business?
Yes, we do have marketing strategy and plan for home textile business for next 2 to 3 years, short term and long term. And we have recently appointed a new business head for this division, who comes from this industry and mainly front end from US and Europe.
Okay.
So that is one. Second, we have now consolidated the total home textile division to be managed by one team, including ASM and Indian Home Textile Division. So that is Sutlej Textiles Home Textile Division. Then third, by the launching of this brand and also by putting up more SKUs in the market and appointing more distributors. As we talk today, we are on the retail points at about 160 retail stores, and which we will increase to 250 in next 6 months. So for each I would say category in home textile division, we have a separate plan as a marketing plan to do that, to achieve these numbers.
Okay. So have you got any orders like?
Yeah, I'll just explain. Like for example, in case of brand, like we launched Nestera, which is necessarily a cut service. So where we are servicing our retail points through cut service. So that is one initiative which we have taken in this year 22, and which is going to fructify, we see in 23. So that has a separate strategy for this cut service.
Okay. Any order pipeline we have in the segment?
Yes, we see. You are talking of Nestera.
Yeah.
So in Nestera, it is on daily basis. we have reached an average of almost 300 meters, which we intend to increase to almost 1,000 meters per day.
Okay. That's it from my side. Thank you.
Thank you, Monica.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Viral, an individual investor. Please go ahead.
Thank you. Congratulations, sir, on a great set of numbers. Sir, in terms of the budget, I believe there was, expectations from the industry on the import duty. So given that there is no reduction in the import duty and cotton prices are rising, what is your outlook on cotton prices in general, and how do you think that is going to impact the company going forward?
Okay. So I'm sorry I couldn't get your name.
Viral, sir. Viral.
Thank you, Viral, for asking this question. And first, I'll answer your second question. The import duty on cotton, see, basically what is imported in India is a extra long staple, ELS cotton. So, first of all, we in India, we in Sutlej, we are not importing any cotton which is ELS cotton or, any imports of cotton, because our all product mix is based on Indian cotton. However, having said so, the impact of import duty on cotton and the cotton prices. Today we see cotton prices in the range of say 78,500 per candy. I'm talking of Shankar 6. So we don't expect these prices to go up very sharply beyond this, and maybe that we see that there will be some sort of reduction in this. And I don't say that when it is reduced, it will come to the old level. We see that there can be a reduction of 5-7% going forward.
Okay, sir.
Yeah. And import duty and machinery also, if you want it. So I hope this answers your question, or you need?
Yes, sir. So this is fine. And do you plan to make any follow-on requests to the government in terms of the duty, or?
Yeah. See, the associations are doing it. We are part of city. So as an association, yes, definitely, various associations are engaged with government agencies for this.
Right, sir. Thank you, sir.
Thank you. The next question is from the line of Prerna Jhunjhunwala from BNK Securities. Please go ahead.
Hello, sir. Congratulations on... Hi, sir. So congratulations, sir, on a good set of numbers. Just wanted to understand this raw material scenario across polyester, VSF, as well as cotton for you. How it is moving, and how you are able to pass on the increase in prices to the customers. Like, what is the acceptability today?
Yeah. So if we look at polyester and viscose prices, polyester prices have shown jump over a period of time, and so has viscose. So what we are able to pass on part of it. See, today we cannot, we were not able to pass on the full increase in terms of, I would say, the price increase based on polyester and viscose. We could do it to the extent of 75 to 80% as an average, based on the product mix. Because, see, these prices are directly linked to fiber as well as when we have value added. So value added, there we can get a little more increase than the normal counts. So I would say that we were able to pass on 75 to 80% of these prices based on fiber. And we see that polyester trend is going to be little strong based on the raw material prices and also prices of crude oil. So in the short term, we see that polyester should remain firm to range bound.
Okay. And so how is the demand shaping up? Because, cotton prices have increased so meaningfully in the last 1 year. So do you think that the demand for polyester and viscose-based products will increase in the in meanwhile period till the cotton actually settles down, as you said to a previous participant?
Yeah, Prerna, you are absolutely right. What is going to happen is that I would say that the blend would increase. Where today we are using, say, 100% cotton, there could be something which is blended with viscose or polyester. So that would increase in a little higher segment. Lower segment, yes. There will be some shift from cotton to polyester and viscose. But I would say if my industry experience says that that shift could not be, I mean, it would be in the range of, say, 8 to 10%. And it will be mostly in the blend.
Okay. So which means that the demand for our industry, our segment will actually improve meaningfully going forward, at least in the near to medium term, till the various raw material prices are going to remain high. Just wanted to understand how you are going to capitalize on this when you're running almost full capacity in the yarn business.
Yeah. So, see, there are a couple of things which will happen in this. One, this blend mainly in the grey segment. When I said blend between cotton, viscose and other, could be on the grey segment. Second, to answer your question, it is the change, it's a shift in the product mix in terms of count. We might get little coarser and increase the production.
Okay. Understood.
Yeah. So that is one way we can do that.
Okay, understood. So, but how should we look at Sutlej from next 3 to 5 years perspective? What will be the growth driver for the company?
See, the growth drivers for the company would be one, the value addition, that we would like to add value in our business both in spinning as well as in home textiles. And the second would be that our control on our raw material by having this green fiber plant. See, today we have this capacity of almost 3,600 metric tons per month, which is almost equal to our consumption. And there we would like to add value addition in terms of, I would say, bauxite is one, then could be fire retardant. There's so many things where we can add this and we'll have control over our raw material. So the growth driver for us going forward is value addition in yarn, our home textile and green fiber business.
Okay. And sir, are you seeing better profitability in the green fiber business today? Given that the entire world is like looking at climate impact of using natural resources or wastage created by the sector.
No, I agree with you, Prerna. We see this traction, and we see this traction more as the concept of sustainability is growing. We have got the certification as well. So in green fiber as well as in our yarn units. So this concept of ESG and all these certifications, we are now having it. So now we have to market it. So I think we'll grow on this proposition of value addition in the group.
Great, sir. Thank you so much for answering in detail. All the best.
Thank you, Prerna.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Aditi Rathi from Niveshaay. Please go ahead.
Hello. Hello.
Yes.
Yeah, we can hear you. Thank you.
Yeah, hi. Yeah, good afternoon, everyone. So my question is on the budget side. So there has been a decrease in the import duty on yarn, fabrics and other accessories of textile. So what is your take on it? How do you see the current scenario in that terms?
See, we see that this reduction in import duty on certain category of yarn. So,
yeah, right.
So it is in certain categories of yarn. So we see that in terms of grey man-made fiber yarns, I think within India. And what benefit really comes out of this needs to be seen. I think it will take at least 1 quarter to figure out what is the exact impact of this.
Okay, so currently as such it is not affecting you directly because maybe that particular segment is not related directly to your business?
You are absolutely right, Aditi.
Okay. So, like maybe in future that might, like as you said, after one quarter you'll be correctly able to figure out how is it affecting you?
No, I was saying affecting the industry. I mean,
Okay.
yeah. See, in case of dyed yarn, this impact comes as there is a lag in this. So, for example, if the grey yarn sells more within India, there can be more demand for dyed subsequently. So we have to wait and watch, at least for a quarter.
Okay, fine. Okay, so I have one more question. Can you tell me, how much percentage of yarn is currently being imported on the side of cotton versus handmade?
How much yarn is?
Currently being imported.
No, by Sutlej? No, we don't.
Okay. Generally for India, if I see the domestic market.
Domestic market, I won't have the exact figures, but I figure out that it is more of the man-made yarn which is imported, and also filament yarn. Cotton yarn import I don't think there too much of cotton yarn import in India.
And your company doesn't have any import-related data for this, right?
No, company may have data on import related. I don't remember it offhand, the figure you said. Huh?
Okay.
Yeah.
Correct. I mean, you don't import any yarn.
No, we don't import any yarn.
Okay, fine. Thank you so much.
Welcome.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Renuka Jadhav from an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. So my question is on the CAPEX front. So what is your CAPEX outlay for FY23 and FY24?
Thank you, Renuka ji, for asking this question and being here. Our CAPEX outlay for 23-24 is under preparation. So we will have to. We won't have too much of CAPEX. It is the debottlenecking which comes up, and we are underway to prepare it and go to the board in the next board meeting.
Okay, sir. I would also want to know, going forward by the end of FY25, what can be the revenue mix between yarn and home textile?
The revenue mix, what we expect. These are just offhand figures. What we have a plan. So I would say home textile would go to almost more than 10%.
Okay.
Yeah.
Okay, sir.
Because the category we are in today, for example, if we expand the categories in couple of years or 3 years, then it might change in home textile. But the categories that we are in upholstery and drapery, we expect this percentage of the revenue.
Okay. Okay, sir. Yeah, that's it from my side.
Thank you so much. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone who would like to ask a question, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. Deep Singh for closing comments.
Ladies and gentlemen, thank you very much once more for attending this conference call, and I would like to conclude this with a statement which you might have read also from our chairman, Mr. Napani, that textile industry continued, I quote, textile industry continued to witness strong demand and volume growth on back of ebbing fear of COVID-19 and Government of India's successful mass vaccination campaign. While there was some uncertainty about impact of third wave of COVID during the quarter, the Indian textile industry is experiencing high surge in demand with structural changes in textile supply chain triggered by China Plus One strategy and tailwind with various government initiatives for the industry. Cotton prices rose sharply and continued to stay high, part of which was offset by improved yarn realization and higher efficiencies. We are fully geared up to meet growing domestic as well as export demand going forward with our well-diversified product portfolio, unquote. So thank you very much, and I would wish all of you to stay safe.
Thank you. On behalf of Sutlej Textiles and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.